Well, the digitalization of money represents a turning point in monetary history. New forms of money have emerged as a result of technological advancements, and cash usage is decreasing over the world. And consumers are looking for convenient ways to spend their money in a digital age. Previously, there have been several problems with digital banking. For example, the efficiency and safety of payment systems are low, including financial fraud. Moreover, cryptocurrencies, well-known digital currencies, are exceedingly volatile and have no official backing. And many of them could never replace a national currency due to practical reasons such as large transaction fees, scalability issues in terms of transaction. So, due to those problems mentioned earlier, it encourages the central bank to issue CBDC in order to address those concerns, which will be one of the most significant changes in the banking industry. Ladies and gentlemen, a CBDC is an electronic form of money issued by the central bank and has been recognized as a legal tender, with potential wide use by households and businesses to store value and make payments. Moreover, CBDC provides privacy and financial stability, improve payment systems, promote financial inclusion, protect against financial fraud, and accelerate the transition to a cashless society.
And what are the CBDC's promise? The main promise of the CBDC is exactly that it seeks to address the problems related to the inflated power of the banks in an increasingly financialized economy. Firstly, CBDC would decrease the structural power of the banks, since the economic system would be less reliant on the stability of the private banking, so that people are usually concerned about the stability of the private banking as they have to rely on themselves. But with the CBDC, people can now rely on the government, which hardly failed. In detail, CBDC, which use decentralized computing technologies like blockchain, allows savers to open a digital currency account with a central bank letter. As being able to monitor legally, CBDC is therefore safer and trustworthy than traditional banking system. For the second promise, CBDC could reduce the infrastructural power of the bank. Therefore, it helps central banks to regain control over their monetary policy, because CBDC is able to provide a more direct connection between customers and central banks that could extend access to the general public. And for the third promise, which is the finance inclusions, CBDCs could lessen the cost of implementing a financial structure within the country that brings the finance access to the unbanked population who do not utilize financial services from banks, such as saving accounts or credit card, to choose CBDC as similar to the banknote. And the last promise of the CBDC is cross-border payment improvement. CBDC is a great opportunity in the monetary system to deduct cross-border payment by reducing the complexity of the distribution system and accelerating jurisdiction, incorporating with the government sector.
However, every opportunity and hope might have hidden perils that all stakeholders might dismiss. That's why CBDC is not 100% issue in many countries. First of all, let's take a look at perils that related to central banks. Because the central bank is independently controlled, the monetary policy can be conducted and implemented without asking for other improvements. Therefore, giving independent power to the central bank can create moral hazard. Besides, issuing CBDC might also offer pressure on the central bank because it leads to difficult decision problems that the bank never encountered before. For example, the central bank has to monitor individual saving accounts and transactions, which are the duty of private banks rather than central bank. Thus, higher responsibilities will be created as a burden for them. Apart from the problems that relate to central bank, CBDC also threatens financial stability. Although the central bank seems to be more reliable in digital currency than the private banks, there is a likelihood of bank runs. As the number of customers will be located in only one place, the central bank might not have enough cash to facilitate same place and same time withdrawal. This will require the central bank to create a strong regulation that is more intense than ever, since the failure of CBDC will be severe than a usual bank run occurred in private banks. Another issue is that in case of a central bank failure, the reputation they have made will be destroyed, which will be more difficult to recover compared to private banks. And the last peril is about cybersecurity. Cryptocurrencies have been the target of hackers and criminals on multiple occasions. A central bank issued digital money would undoubtedly attract the same type of criminals. Another issue is about the people's data that the central bank has to handle. CBDC will force the central bank to hold a lot of personal data of citizens, which will require the central bank to put itself to regulate private data, which can lead to the risk of information misuse. And these are general ideas about promise and perils according to the characteristic of CBDC. The next section will be a deeper discussion of pros and cons of CBDC from analyst perspective.
For the pros, if CBDC is fully implemented, it is definitely that the government will completely receive a lot of benefits than other stakeholders, such as they can cut off the coins and banknotes production costs, as well as cutting the money transportation costs at the same time. Besides, they can monitor their supply of money all the time. They can see everything's and everyone's money spending behaviors, whether it's the company inflows or outflow, also which goods and services that the people transfer to buy, how much or how frequencies, so they know everything. Even collect the taxes directly from citizens or business accounts, whereas with no CBDCs, the government cannot fully monitor citizens' money usage that much, except they have required the organization for specific purposes, and they still need to bill the tax payments and ask for any willingness to pay from people. If the government implements CBDCs and use the customer data to develop the government policies, it can help government work easily and could be effective for the well-being of their citizens as well. For example, when an economic crisis occurs, if the government knows the citizen incomes, they can correct the right citizens to subsidize and better to recover the economic recessions in the country. Moreover, due to CBDCs is more fluid than cash, that it can be transferred faster. So it's definitely that this characteristic will affect GDP growth in the countries as well.
For commercial banks, as we all know that they need to deal with the central bank in order to flow the money in the system. So it means that the huge amount of physical banknotes were transferred to many commercial banks. Therefore, CBDC in the form of digital money will come to reduce the issue in the wholesale sector when transacting the money. It reduces time spent on production, cost used to transfer the physical money, as well as reducing the risks such as the loss of banknotes, the robbery, and so on. Another advantage of CBDC is to solve the transaction between commercial banks, which is difficult to do because it is difficult to spot the customer banking account in other banks due to the system of each bank. It may cause an issue in investigating the customer data who did not use the same bank account in doing cross-bank transaction, no matter if it is interbank transfer or using other ATM card. For ordinary people, CBDC can correct the people money in the form of data guaranteed by central bank. It is good that your money will not be lost, and if it is lost, it means that the whole citizen and countries need to brace yourself for the huge economic downfall, or maybe something wrong with the government. So, CBDC is a digital currency that comes to facilitate people in efficient serving. Unlike when you open the money account with a commercial bank that get the higher risk, another advantage for people is that you can transfer vast amount of money out at once. When compared to the traditional process, the bank probably cannot find millions of dollars of cash immediately. But CBDC as the digital kind of money can help solve this problem and also reducing transaction fees.
Now, I guess you might want to think about the downsides of the central bank digital currency. So, in terms of banks, they tend to typically lose 20 to 30% of their funding base due to the presence of CBDC as a deposit intermediary, which can be considered as disintermediation, as money is sent directly to individuals. Okay, so the question then becomes whether individuals will choose to deposit with commercial banks when the risk is greater in the event of bankruptcy. Then, how about in the public sector? I think you all can guess that citizens have access to money everywhere. However, in Thailand, our team argued that this cannot be done till the government finds a solution to the problem that not everyone is able to use electronic systems as well as generational gap. In addition, merchants must be willing to modify the manner in which they accept new payment methods, such as by employing smart cards for convenience and security.
China is the first country changed to yuan currency as well as Sweden that has tested using e-krona digital currency. The reason is Bank of China has urgent needs to transform banknotes and coins into digital currency. China wants to reduce cost of production and the cost of cash inventory. Cash and coins are difficult to use because they are easy to imitate. Due to the anonymity of using cash, it can be used to pay for illegal purposes. Manufacturers see the internet system under government control, and China has stable cybersecurity that protects data hacking monitored by the government. Now, Thailand, Canada, and England is operating and processing about the implementation of CBDC. BOT started wholesale CBDC with bank under internal project. For business sectors, CBDC is in testing phase. The first retail CBDC with SCG company to transaction with supply chains.
It is undeniable that Thai people need digital currency for the digital economy as the same as many countries did. However, CBDC will not entirely disrupt the banks, but it will be another financial alternative and security. Individuals can choose whether banks or CBDC meet their purpose of deposit, transfer, or purchase. If Thailand should set the retailer CBDC model of depositing with no interest, some people might prefer to deposit some money or hold money in the bank for receiving the interest. The central bank still maintain financial stability and financial policy of the country.
So, CBDC should be considered as an alternative, not a primary option. Most importantly, the authorities have to be mindful of the regulating possibilities of the financial sector. Yes, it's undeniable that implementing CBDC could be a good option when financial reform fails. However, if CBDCs are being used, the accountability procedures that apply to central banks should be seriously considered to ensure that the increased power comes with increased responsibility. As in Thailand, the oligarchs now had to look at the main problems of the banking system first and then focus on solving those problems. If those problems can really be solved, the adoption of CBDC might be a good solution. But for our group, we don't yet see a pictures of Thailand adopting 100% CBDC because it's still being studied. Besides this, the fact that cash will not remain in the system in the next 10 to 20 years may still seem impossible for Thailand and many other countries.